Ni hao, HyperChange. Welcome to another episode. Today we're talking about Tesla's progress on Gigafactory 3 Shanghai. I'm sure we're all super excited after the stock is soaring on Q3 earnings, but one of the most important pieces of news that I wanted to dive a little deeper into was the updated timeline of Gigafactory 3 Shanghai. We got a lot of amazing info on that, and I've updated my sort of financial projections for the impact this could have on the company, and why just generally I think this is a really big deal for Tesla. So let's recap it to start. Some amazing pictures here. 10 months from literally a pile of mud outside Shanghai into this beautiful factory with hundreds of employees already pumping out test vehicles. So that's right. So when Tesla announced this project in January 2019, they had the extremely ambitious plan of actually building cars from the same factory that didn't even exist by the end of 2019. Well, on the conference call, Elon Musk confirmed that they're already building basically beta units or trial production runs of the Model 3 in China, and it looks like they're still on track to commence deliveries of the made in China Model 3 later this year. Why is that a big deal? Tesla's already selling in China because the made in China Model 3 means Tesla doesn't have to pay import tariffs. They don't have to ship the cars overseas, and this means drastic price savings for Chinese consumers. Basically, Tesla's cars get a huge price cut overnight despite being the same exact product. What do you think this is going to do for demand? It's going to be a huge tailwind for the company. So these are some amazing pictures that we got from the Q3 letter, which are just beautiful. So not only is the outside of the factory complete, which we could all see in these drone videos, but actually inside the factory, and Elon explained this on the conference call, the machinery is being installed. There's a ton of machinery and actually starting to do these trial production runs. So we can see the stamping press here, which is the part that actually takes these sheets of metal, stamps them into the panels of the car that then get put together to make the frame or the body in white. As you can see, that's already going there. We see some sort of side panel situation. Here are the actual robots of the body shop, putting all these pieces together, putting things in the car, looking really cool here. Then we have another sort of higher shot of the body shop. This is the production line. As you can see, this is not just an empty factory at all. There's already machinery in here going on with these test vehicles. These are basically the body in white. You can see it says BI number 5. So they're already building batches of these test vehicles in China. Here's another shot of the paint shop. So just these really beautiful imagery. And I think this really just made it hit home for me at how far the progress had come on Gigafactory Shanghai. And I love the Tesla logo in front. I just think this looks so badass. And it's pretty surreal to see that this thing exists literally almost as a perfect replica of this CGI image we were shown at the beginning of the year saying this is our vision, now it's here, now it's completed. And why is this such a big deal for Tesla? Why does this matter? Because China is the world's largest vehicle market. It's the world's largest mid-size sedan market, which is the Model 3's category. And so there's a huge opportunity to drive sales of hundreds of thousands of vehicles incrementally in China, which is going to have huge consequences for Tesla's financial situation in extremely good way. So this is the quarterly revenue that Tesla has posted in China. You can back this out of their quarterly SEC filings. A little bit lumpy. You can see a big spike in Q1 2019. That is when they started introducing the Model 3 there. And this is what I'm expecting for the next 2 quarters, just a little bit of a guesstimate. We don't actually know, even though Q3 has been reported, they haven't broken down the geography till the 10Q, so we won't know. I assumed a little bit of a bounce back because there was some sort of new purchase exemption tax that was in Tesla's favor that caused more sales. So this could actually be a little low ball. Then I have a spike to 850 million in revenue in Q4 of this year as they deliver a handful, maybe 2,000 to 5,000 of the Model 3 made in China, and that will be an incremental revenue boost with a little bit of cannibalization, but that will drive some top line growth in China's business. So taking a step back on an annual basis, this is what Tesla's business in China has looked like, going from 0 billion or entering the market in 2013 to now a $3 billion business in about 7 years here, and I think we are just getting started. These are my estimates, but I think this could just be the beginning of massive growth in China, because up until now, Tesla's really had their hand behind the back in this extremely exciting market. They're building the cars in California. They have to forecast inventory. They have to ship them overseas. Like I said, they have to pay these import tariffs. It's huge time, capital, and cost friction on this market that is such a huge opportunity for Tesla, and that is all going away at the same time when their cheaper price Model 3 and then Model Y, which is going to significantly expand the addressable opportunity for Tesla's products, is coming online. So that being said, here is me putting pen to paper. This is just speculation. Tesla hasn't confirmed, or they haven't actually said their guidance in production, so this is just me speculating. But I am estimating about 5,000 units produced and delivered from Gigafactory 3 Shanghai in 2019, and that is a super speculative number because it's all going to be right at the tail end of the year. So if they're a couple of weeks early or late, this could be totally off. Then in 2020, I'm estimating that they get to like this sort of phase 1 capacity, which is about 150,000 cars a year, pretty much all Model 3. And so I'm assuming that in 2020, the annual production and deliveries from the factory is 150,000 units. And then in 2021, I have that doubling to 300,000, which is going to be a mix of Model 3 and Model Y. And another tidbit that I wanted to mention, which is HyperChange has been speculating about, but that second facility that they're building next to Gigafactory Shanghai is going to be the battery manufacturing facility. So when you think about this next generation production line that Tesla said will be the model for all future Gigafactories. Why is that so important? Why is that different? Because unlike the setup in the US, where you're building the batteries in the packs in Fremont or in Nevada and shipping them to Fremont, California, now Tesla's essentially combined those two factories, batteries and cars, into one mega factory, or that is what the end vision for Gigafactory Shanghai is. So it's sort of this next generation consolidation factory, really having raw materials, sheets of aluminum and raw materials for batteries go in, and then you have an electric vehicle come out the other end of the factory. A hell of an asset if you ask me. Anyway, let's look at how these projections translate into revenue for the company. I assumed an ASP of the Model 3 of about 45,000 USD for China. So if you assume, and then I assume like this cannibalizes a lot of their current business in the country. So, and basically didn't assume any sort of energy products revenue or anything really besides Model 3 and Model Y in China. So if you want to add those in, those would be on top of this. But if you just crunch the numbers on 150,000 cars times 45,000 cars a year, you're almost getting 7 billion in revenue. That's how I got to that 2020 estimate. Double that to 300,000. We're looking at almost 14 billion in revenue in 2021. And this is just my sort of back of the napkin math of where this China business can go. And as you can see, the growth before this was exciting, but this is really a whole new ballgame. And this is really going to have a huge impact on Tesla's financial statements. I mean, Tesla right now in the past 4 quarters has done about 25 billion in revenue. So we're talking about an incremental 4 billion in revenue in 2020, and then an potentially incremental, 10 billion, 11 billion on top of that in 2019 run rate by 2021. So we're talking about Tesla's business going from 25 billion to, 35, 37 billion if nothing else grows other than incremental revenue from this China Gigafactory. So this is a huge catalyst that is going to drive, everyone this quarter is concerned about the revenue growth. It's just a symptom of a hard comp quarter and sort of timing of product launches and production ramps. But if you look at the long term, Tesla's production overall is going like this, and their deliveries and sales are going like this. And I think a huge piece of that next growth of that catalyst is going to be Tesla China, and this is how the numbers are going to look. And I just wanted to quickly dive into this chart that Tesla shows in their Q3 letter, which shows that the sales of mid-size premium sedans in 2018 in China were over 500,000 units, compared to about 300,000 units in the US and about 400,000 in Europe. So this is just mid-size sedan, so not even to mention CUV, the market Model Y is attacking. So I think there's room here for the Model 3 and Model Y to potentially even sell more than 300,000 units per year in China. I mean, it's hard, and this number could be growing rapidly as well because of the growth of China's overall economy. So I think this is just really important to keep in context. Like, I think investors in the US and Europe, we think we're the center of the world, the most important, this huge market. We don't realize that there's actually a way bigger opportunity overseas in China, and that is what we're trying to analyze now. And, Tesla even says it themselves that we believe China could become the biggest market for the Model 3 in the long term. So now let's talk about profitability. In Q4 of 2019, the first quarter of this comes online, the profitability of these made in China Model 3 cars is going to be awful. That's right, awful, because this is the same as any production ramp. This was covered in the conference call, but you have, a huge base of fixed expenses of a ton of robots, a ton of workers that are set to pump out 150,000 cars a year, but you don't get there immediately. First it's 1,000 cars a month, then 2,000 cars a month, then 5,000, it takes time to actually get those fixed costs and sort of maximize the capacity of that production line. And in that time, we're going to see gross margins get hit from the made in China Model 3. So that could be a drag on gross margins in Q4 and potentially even Q1 2020 while they're ramping production. But in the long term, this was a question that was actually asked by Adam Jonas's fill-in, which I think was a brilliant question, which was, do you think the profitability of the made in China Model 3 will be better than basically any of your other products? They sort of sandbagged it and were like, we don't know. Who knows? It's hard to tell if the profitability is going to be that good. I think it is. Either they will cut prices dramatically of the made in China Model 3, or the profitability of this car is going to be in the 25% gross margins by mid-2020, potentially even higher. Why do I say that? One of the biggest costs that goes into Tesla, as much as they do, robots and automation, and they're saving money there too, I'm going to get to that in a sec, is labor hours per vehicle. And labor cost per vehicle. So the amount you pay, an hourly worker, the all-in cost is a huge component of the gross margin of the vehicle, these factory workers' salaries. If you think about a factory worker's salary in Nevada near Reno, it could be $50 to $60 an hour when you're all in, healthcare, benefits, all that kind of stuff. In China, my research is pointing closer to $10 US an hour. Literally, potentially, an 80% or more decrease in the cost per labor hours for the factory. I think that's going to have a direct, huge tailwind on the gross margin of the company. The second big thing, the robots. How are they saving money? This part, shout out to Rob from Tesla Daily, because he really made this click in my head. I'm going to read this part to you from the shareholder letter. We have also dramatically improved the pace of execution and capital efficiency of new product lines. Gigafactory Shanghai was built in 10 months and is ready for production. While it was 65% less expensive, CapEx per unit of capacity to build than our Model 3 production system in the US, continued volume growth and cost control are an important combination for achieved, sustained, industry-leading profitability. So, I'm going to read that again. It's 65% less expensive CapEx per unit of capacity. Why is this a big deal? Tesla's saying all those billions of dollars we spent on robots to get that Model 3 production line off the ground. Well, for this new Model 3 line in China, it cost us 65% less for each car that we're going to spit out. Why is that a huge deal for the financial statements? Because that CapEx, all those robot investments, capital expenditures, they don't get put on the income statement right when they're spent. They get put on over time as depreciation and amortization as those assets and robots depreciate over time. Well, if there was a less investment, there was less depreciation. So the drag of the depreciation and amortization line on Tesla's income statement is going to be way lower, potentially by 65% per unit, because of this decreased CapEx. So to sum it all up here, Tesla's Gigafactory, the stock price is, as much as we're up right now, is still about flat in the past year, despite the fact that we've gone from nobody believing this China Gigafactory was anything, it being a pile of mud, to it being totally completed ahead of schedule and being just around the corner from pumping out billions in incremental revenue from Tesla that is extremely profitable revenue as well. And I don't think the market is fully appreciating the scope of the impact that this is going to have on the company's financials over the next 6 to 12 months. And, I think this is going to surprise in terms of how quickly this ramps, because Tesla has learned faster than ever. This is the more simplified production line, and the profitability of that ramp is also going to surprise to the upside. So anyway, this is HyperChange. I just wanted to give you guys my estimates for Tesla China revenue. I'm thinking about $3 billion 2019, but 2020 $7 billion, 2021 potentially $14 billion, as this becomes a bigger piece of Tesla's overall business. If you think about it from, how are we changing the world? How is this moving the needle on energy transportation perspective? China is a huge, massive country. Getting them this electric vehicle technology into the, with a new factory into the hands of China, taking hundreds of thousands of ICE cars off the road, replacing them with Teslas in one of the world's fastest growing economies, I think is an amazing step forward. And I'm really excited to see Tesla continue to partner with China and sort of help them, mitigate their fossil fuel use and pollution, and really help the Chinese economy transition to something more green and sustainable. I think this is a very long process and a huge business opportunity that Tesla appears to be leading, that we are just scratching the surface and in the early stages of. And anyway, would love to know what you think in the comments below. If you have any more detailed analysis or estimates of how this is going to impact the financial statements, please leave it below. This is HyperChange. Huge shout out to our Patreon producers funding the channel. Also wanted to give a huge shout out to Vincent on Twitter, who's a good buddy of mine, and he just has been tweeting some amazing Tesla news from China, and I've been following him, and he's the reason why I've been so interested in this. He's got the best content, so definitely check him out. Anyway, this is HyperChange. I'll see you guys next time. Peace.